Hello guys, good morning. I hope everybody's doing well. So here we have the Australian dollar and the New Zealand dollar together here. So if you look at this currency, it's been pushing higher. This cross pair, it's been a really bullish for a while, I'd say since 2025. And if you look at it now, maybe if we look at it technically, we'll say that the trend continues to go higher. But when you look at it fundamentally, guys, prepare for a drop. All right, prepare for a drop. So this is the process that I follow when I'm doing my fundamental analysis when it comes to cross pairs. All right, so here we have the AUD slash NSD. So we understand how institutions purchase or buy in this Forex market. Mostly they focus at buying strength and selling weakness. So what we can do here is now to spot a strong currency and a weak currency. Most of the time when you have, let's say that you have a strong base currency, then it supports a bull market, but you have to make sure that the quote currency is weak. You're getting that? So through what we call money rotation, money moves from weak currency to the strong currency in this case. So here we have, like previously, we have had a strong Australian dollar and a weak New Zealand dollar in this case. So actually, AUD, NSD, it's been bullish for a couple of months, all right, almost a year plus, because you see this, the low of January 2023, it kind of ranged a little bit, but come 2025, it took to its heels and it went all the way to the upside. So guys, here, I'm seeing something here, and this one is just a case study. My point of view from the fundamental angle, I want us to look at it, and maybe if you like the analysis, keep an eye on it. I always say you don't have to trade my analysis. You can use them as a case study to see if indeed fundamentals works or not. Because for me, fundamentals is the holy Bible. They drive price. Price doesn't drive itself. So when I look at it, like I get to see a bigger picture of what the market's likely to do, then I prepare myself. So let's get started. So the first thing I'm going to do is to start by looking at the Australian dollar as a base currency. So in this case, we'll go to the institutional chart and bring out the Australian dollar, which is called the 6A. Now that I have the 6A here on my chart, as you can see, allow me to get rid of these drawings there. So this is the monthly chart. I'll go to the weekly chart and I'm going to look at what the smart money are doing and what the retailers are doing. So in this case, I'll start by looking at the fund managers and the smart money. So I'll go to my COT report tools. I'll pull out the COT report here. And guys, this report is public. It comes out every week. Now, what you're seeing here, these are what you call the retailers, all right? These are the retailers' net position. Then I'm going to pull out another one. All right, I'm going to pull out another one here. Now, we're going to have the fund managers here. Remember, the market's driven by three groups. We have the smart money, we have the non-commercials, and we have the fund managers. So, for example, just very quick, I like being open as a book. If you want to get all this data, guys, that I have here on my tools, whatever these tools they give, because they don't follow the price closely, come to what we call CFTC, cftc.gov, cftc.gov, like that. Just click enter, then you'll be able to open this side. This where you get to see, you'll see this where the data is. You come here, market data, scroll down to commitment of traders report, click on it, then go down to what we call legacy report. So scroll down. Here we have the legacy report. If you see this written Chicago Mercantile Exchange. Actually, in symbol, it's called in symbol it's called C for Chicago, M for Mercantile, then E for exchange, or Chicago Mercantile Exchange. If you come here, it's called CME. You see it right here. I'm sure you can see it, short form. So if you come here, you click on short format, you see here, you get to see the non-commercials, commercials, and the non-reportable. These are the majority now, what we call the retailers here. If I wanted to take a pair like AUD, I want to see to my laptop or my computer, I'll press Control and F for finds. Then I just write AUD. Then I write enter. Then it's gonna pull out here, and here we get to see the non-commercials, commercials, and non-reportable here. These are the contracts down here, long and short here. Guys, I'm not going to go into details into this, but this report, whatever these tools they do, the update from this one. This report comes out every Tuesday of every week. If you look at this, the date and the time, this data was released last week. So let's proceed. I just wanted to let you know where the data is coming from. So we are not chasing price around. So here we can see retailers getting more bullish here. All right, these are the behavior of retailers getting more bullish, and this down here, these are the fund managers. We can easily backtest this data only by, let's hide the market at the top. Let's hide the market, and I want to show you something. Every time institutions get more long, all right, I'm not institution, retailers get more bullish, I mean not bullish, the market will drop. So here we can see retailers who are bullish, they're even more bullish here. Look at this. Here, retailers are getting more bullish. Fund managers are also doing the same. Because fund managers, guys, you have to understand their work in the market. This here, again, you see retailers getting more bullish there. Fund managers following closely. Again, here, retailers getting more bullish. Look at these fund managers down here. That. So I can point out a few things here. How I look at these things, you see here, retailers are bullish. So I'm marking everywhere you see retailers spiking, getting too bullish. Like this. We can see even here, from this place, because they're bullish. How do you know that they're bullish? It's because previously they were bearish here. So you're just looking at what we call their historical behavior. Even here and here. We can even go all the way to here. So this is enough. We are back to 2020. And let's bring in the market. I want you to see that every time retailers, because we have to understand that what the fund managers are always doing. The fund managers are the trend followers. But retailers come in last after they see the trend and they believe the trend will continue, then they jump in. So they buy as the last group, and they're always wrong most of the time. So if we say retailers are always wrong, now let's bring in the market. And I want you to see every time I have the lines, I've plotted my vertical lines, we expect to see the market dropping. So right there, look at that. So if you look at the top, allow me to now reduce this, and give the market a little bit bigger space. We can see when retailers were getting more bullish, fund managers following the trend, we get the market dropping. Look at this, we get more bullish. You can see a couple of red candles there. Look at this here. Retailers getting bullish again. We get a massive drop. Look at this. They get bullish, you get a drop. Retailers get more bullish, we get a drop. Retailers get more bullish, and you can see they chase the trend, the market versus here. They do the same. Retailers get more bullish here. And you can see down there as well, price drops, retailers get more bullish, price drops, retailers get more bullish, price drops. And again, you can see the same thing here. How many times has it failed? I'm sure you have not seen anywhere it failed when retailers were bullish. So what does that mean? Prepare for a drop in the coming days. Now, that is like the red, if you see the top tool here, this is the retailers' behavior. But you can also look at what we call the fund managers. Fund managers, in this case, I'm going to hide the retailers here. Let's just hide them a little bit down there and show you something about the non-commercials as well. Non-commercials are the trend followers in this case, and also they follow the trend, and you can see when they were getting bullish, they were getting more bullish, the price dropped. When they were getting more bullish here, where is it? Around there. Oh, sorry. The price went lower. When they were getting bullish, you can see this, get a massive drop. They're getting more bullish here, we get a drop. They're getting more bullish here, we get a drop. They're getting more bullish here, we get the drop. Guys, you can see how many times this happens. When they get bullish, price goes lower. Here, they try to get a little bit bullish here. You can see here. Price goes lower. They try to go higher. Price goes lower. They go higher. Price goes lower. So just to cut the story short, save on time, we can see they're even more bullish here. And guys, what does it mean? We're going to get a drop. So the fund managers in this case, we get to see that this means that Australian dollar is going to drop. And not just to drop, guys. I want also you to see there's one thing that retailers have done that they have never done in history of the Australian dollar. For the first time in history, these guys that are at what we call all-time high. Look at that. Small speculators that are at their all-time high. If you look at this, I've gone all the way back to 2001. Retailers have never been bullish like this. This means that we're expecting a massive turn. Every speculators are all crowded long. Now let's look at the smart money. If you bring in the smart money here, look at this, guys. Smart money, and go down here, look at this. All the smart money, they are getting more bullish. If retailers are at their all-time high, we can also check smart money. Where are you? Look at this. Since 2006, the first time smart money are getting more bearish like this is they were like, the last time they were bearish like this was 2013. So 2026 to 2013 is like around 13 good years. This pair, guys, has to turn. It has to turn. So if we have that, then we want to see on the index, because we have to measure the strength of these guys fundamentally. So we combine the retailers, the fund managers, and the smart money to see who's winning. Now we'll bring in what we call the index in this case. If I bring in the index here, we can see here at the top, these are the retailers. Down here, these are the smart money. Smart money, you can see they're bearish. And guys, also, I can be able to do it, to look back, because these guys are hedgers. So I can be able to go back. This is like they're hedging that in the last 1 year. I can go up to a maximum of 2 years, no, 3 years. But here, on 2 years' time, look at this. Smart money remains to be bearish. In this case, we go to 3 years here. 3 years here, guys, again, look at this. Smart money are bearish, and we can see here. So let's create a system here. Look at this. Smart money get more bearish on the index. They're extremely bearish. And what does that mean? We're looking forward for a turn. The market has to turn. The market has to turn. We remain undervalued. We remain bearish. We remain like we're very extreme down there. Then look at this here. When they are bearish down there, do this, see it properly. Down here, you can see they're bearish, smart money bearish, price drops. Here again, you can see when smart money were bearish down there. Here, you can see they were going lower. Price went lower. The last time because they're using the 3 years look back. So look at this, smart money getting more bearish here. You can see here they have remained bearish. Price took some time, then went lower. So last, let's look at few. Again, look back here. Bearish, bearish, price goes lower. Here again, bearish on the index, getting more bearish, and you can see price drops. We can even go back and even talk about this one, bearish, bearish, price goes low. So you can see, guys, how often this happens. So in 3 years, smart money are bearish, and we can add in even the fund managers on the index as well. And look at this. Fund managers are also bullish in this case. They're looking forward for a drop on the Australian dollar. Now, if we have that, we can look at other things like what? Like the value, right? Like the value. If I bring out what you call the valuation tool here, and I'm looking at the Australian dollar against, mostly I want to focus at the dollar here. I measure the value of AUD against the dollar. You see, on last 10 days, we are not extremely overvalued, but we can go a little bit. increase the valuation room. Can move to see if we go to 15 days. We see we are already overvalued. This means that guys are also prepared to sell the what you call the AUD USD. So you see, if I go to 17 days, if I'm losing 15 days, you can see you're getting overvalued here. And guys, the drop is coming. Better get ready. Stop buying AUD USD despite seeing a strong trend. Look at this. So if I'm looking at it long term, this is what I see. On 30 days, if I go to what you call weekly time frame, I see we're getting overvalued, but on daily time frame, of course, on 15 days, we are already overvalued. So let me see which valuation favors the weekly. 25 days valuation, we are not yet overvalued. Okay, 22 days, you see, on 22 days, guys, 22 days, we are getting overvalued. Yeah. Okay, 20 days. Let me see. I'm looking for something that can match that, and we're going to have a backtest on it. We're going to have a backtest on it. All right. So I'll go back to 22 days. That was 22 days here. We just want to align a lot of things. And I want you to see, if we go above this green line, we're getting overvalued and we're expecting a drop. So here, we're looking for a drop, and it's easy to backtest. Previously, when we were overvalued, look at this, we went above the green line there. Price dropped here. You see here, we were up there. Price took some time, did not drop well, but you can see some red candles there. Look at this. We almost even got overvalued and the market dropped. Look at this, 22 days valuation. Price crossed the gray line there, then went lower. The last time we were overvalued on 22 days again here. See a drop. Here we just touched the green line, getting overvalued, and we got that massive drop. You can see even here, valuation went lower. So guys, drop is coming. Look at that. We were overvalued. We got that massive drop down there. So lastly, let's just reach here, because you can go all the way. Look at this. I'm back to 2014, and you see price took some time and went lower. So AUD actually is going to drop. This means that if AUD is going to drop, already we have the Australian dollar looking weak fundamentally, but technically on the chart, you might say, oh, the trend is strong, markets breaking the structure to the upside, but fundamentally, when I look at it, guys, I see weak hands in this market, and probably institutions will start dumping this currency, and they are going to start buying another currency. So which was the other currency? Here we have the base currency, which is the Australian dollar. So looking forward for it to drop. Now let's go to the second pair, which was what? The New Zealand. On this one, I'm going to be very, very quick. I did not want to take much time on this video. So if you come to the New Zealand dollar here, all right, there's something I want you guys to see. We repeat the same process here. And you see everybody else is going bearish, retailers are going bearish on it, and I want to bring in the fund managers here. So in this one, in fact, I just want to save on time. I'm going to combine my information here. This is just another way of doing things, guys. Now, look at this. Here we have the smart money getting more bullish, the fund managers getting bearish in this case, and you can even be able to backtest. You see smart money buying, you're getting bullish here when the smart money were buying. Smart money, these are the commercials, the blue line, these are the fund managers here. Net positions, actually, we're looking at the net positions here, and you see we go higher. Smart money getting more bullish, fund managers getting more bearish, price went higher. You can even see here, price went higher. We can even see here, price went higher. We can even see here, the smart money were bullish, price went higher. And even look back, even here. And we can even bring in the index, guys, to save on time. Let's bring in the index. If you see the index here, the index is giving me what you call, we have the retailers and the smart money here. So allow me to hide this and just bring in the index. On this one, I want to look at the fund managers, probably, and I want to look at least this, like you see, we look at Smart men are getting more bullish, fund managers getting more bearish here. But I want to look back at least 1 year, 2 years to see how strong the smart men are getting this pair. Look at this. On 2 years' time, smart men are getting even more bullish on the Australia, on the New Zealand dollar. Let's look at 3 years. 3 years. 3 years, guys, here. And now, look at this. On 3 years' time, smart men are getting more bullish. As you can see here, they were bullish here on the index, they were bullish here. And now, if you're bringing now, these two we combine, like matching the colors so that you don't struggle to understand. So here, make it yellow as well, so that you see here the blue, the smart man, and you can see on the index when they're getting bullish, the price bought here. Smart man are now adding longs, and you can see already the NSD is going up. This means that either you're buying NSD, you're already in, or you're looking for a buy, but not a sell. So it's easy, guys, to see where I've plotted the line. The market has been bullish in the past, and again, it's happening again. And these are the fundamentals. Fundamentals have never been wrong. So if that's what we have there, what else are we looking at? We're going to look at the second step, which is the valuation. Just want to measure, want to make sure that NSD is cheap to be bought. And you can see we want to measure it against the dollar here. And you can see already it was undervalued. Look at this. It was undervalued already, and it has started pushing higher. Look at this. It was almost undervalued. We got that strong rally. Here it was undervalued. We got that rally. It was undervalued here. Here undervalued. We got the rally. It was undervalued here. We got the rally. It was undervalued here. We can see price took some time. Yeah, went higher, of course, to this, then a later dropped. So you can see, you can be able to spot every time the market has been undervalued, guys. We have seen results, seen those bullish candles to the upside. You can see there. So you can be able to backtest. You can see even here it was undervalued. If you look keenly, you can see some 2 green candles there. So this means that NSD is pushing higher. So what does it mean, guys? Let's create now a system, a strategy here. Because my system, I'm looking at strong and weak currency fundamentally. Then I'm going to prepare myself to enter the setup. So look at this. We have, let's now create a system here, a setup. We have AUD / NSD. So here we have a New Zealand whereby you see institutions have started now to dump it. This means that it's going to drop. And for it to drop, we need a strong quote currency. And now we have a strong NSD. So the buyers we get here having the base currency as the weak currency and the quote currency as a strong currency, we're looking forward for a bearish market. Too much pressure to sell Australian dollar and buy the New Zealand dollar. So technically, what are we looking at now? Technically, we've got the big time frame. Sorry, I hope I did not mute my mic. I almost touched my mic. Okay, I hope it's not muted. Anyway, if we look at this, let's do it again. We got the big time frame, my life, big time frame, 12-month chart. We can see, looking at the 12-month chart here, we see this market has this type of supply on 12-month chart, and price recently has been pushing higher and is heading towards the supply again. Let's go to 6 months. If we go to 6 months, you can see if we talk of freshness, we're going to mark this candle here. All right, there, because we have institutional, like, look at this, rally pace, drop. This is an institutional exit, what we call departure, to meet the qualification of our supply or demand. Now we go to 3 months. Now, if you go 3 months again, we look here for freshness, then definitely drop all the way to here. All right, freshness. We have done freshness over level and unmitigated. You see the price has touched this fresh zone and showing you reaction there. Now you go to the monthly time frame, and guys, look at this. When you drop on the monthly time frame, kind of some things tend to change, but you see all of this is part of the supply. So I'm going to mark this one, the green candle, but I'm not going to skip this one. So here we have what we call level over another level. So we have the one there inside the monthly time frame. Then we have this that's on 3-month time frame. So let's do the inner one. We can make it green, make it more green like that. then the one outside can just keep it the way it is, like that. So we have two levels here technically. So we can drop now on the weekly time frame and start looking around. Where do we have these zones on the weekly time frames? Now this is where we are. So look at this. You can see on the weekly time frame, nothing much is happening. So on the weekly, if I wanted to refine, I'll go all the way to the pacing. This one. Refine, then we have the wider version here. On the wider version here, what I'm seeing here, I'm seeing some sort of this. You see this one is sort of an indecisive candle, but not really clear. I want to see it on a daily time frame probably. Let's go to the daily and go back to that same place. So guys, we're almost done. Hold on, hang on, and let's finish up. So here we have those two. We have now can be able to see, look at this area, this zone, this particular, can see a daily supply, drop base, drop, it's been touched, not fresh, so we can make it fresh, go back to the basing of the candles and mark the high as well. Here we can just pick all of this zone. And say this way we have our daily, and not daily, this zone goes all the way. This supply goes all the way to this high. We can't lie. That's where it starts from. This is an entire supply and drop base, drop fresh, and we have an extreme level which can go all the way to that high. So this one, yeah, it was too much. Let me reduce something like that. All right, so we have those two areas. So right now, guys, we're going to focus on this first supply until it's broken. Then we're going to look at this one. Can look at this one. So let's see. Let's refresh our chart and look at this, guys. Price is already at the supply zone and it's starting to drop. Man, unfortunately, we're here. So we're supposed to end our sell from here, but I'll be honest with you guys. I don't like saying confirmations. When everything is right, I just position myself and I take a trade. But look at this market. Honestly, previously, this market has had a very, very strong trend in this case. And guys, get ready for maybe a change in trend, for bearish pressure, for bearish market, who knows? But let's get ready. I don't want to put myself here in a strong trend because also the supply is not looking good. So let's do something here. We want to see this market doing this, at least just for confirmation reasons. I want to see this market doing this, breaking a trend line. Look at this. The price has been having this trend line. You see how strong this trend line has been. So let's do this. If it goes lower, right? If it goes lower, because this is what we call if I go back to the smart money concept that I used to use in the past, though I stopped. This rally correction on the support, rally correction on the support. We enter the supply. Let us break the support. When we break this pivot, we violate the bullish trend. Then we can get with smart money. They can say it's change of character. Of course, we don't care. We just want to see this pivot being broken or the support. Then when the price goes back to the new supply, guys, then we go in for a sell. So probably we'll be trading head and shoulders around these areas. So that's what I'm expecting. So let's see this market violate this demand, because this one is a strong demand, guys. And since the trend has been very strong, don't be surprised to see this market doing this and it continues to go higher. Remember, we're just anticipating, lowering the risk and positioning ourselves. So if we can violate this particular demand, then price goes back to a new supply, then we can short it from there. So guys, that was my idea to share with you. Watch this pair. It's been trending for a very long time, and maybe, who knows, just maybe, it can be. It's about time again we get the changing trend. So otherwise, guys, have a nice week ahead. I hope I'll see you. Keep monitoring the pair. Otherwise, have a profitable week. Can add this pair to your watch list. It's your boy, KD Empire.